The Federal Reserve. The Federal Reserve was created in 1913, but the story of how it was created is almost as interesting as what it actually does. In 1910, a group of the most powerful bankers in America secretly boarded a private train under fake names and traveled to a remote island off the coast of Georgia called Jekyll Island. Their mission was to design a central banking system for the United States without the public finding out who was behind it. The result was the Federal Reserve Act of 1913, passed on December 23rd, while most of Congress had already gone home for Christmas. So, what does the Federal Reserve actually do? It controls the money supply of the United States. It sets interest rates that determine how expensive it is to borrow money for everything from a home mortgage to a business loan. It acts as the lender of last resort, meaning when banks are about to collapse, the Fed steps in and saves them with money it essentially creates from nothing. Here is the part most people do not know. The Federal Reserve is not a government institution. It is a private entity. Its shareholders are the major commercial banks. The profits it generates go back to those banks first before anything goes to the government. The United States dollar is the world's reserve currency, meaning almost every country on earth holds dollars and conducts international trade in dollars. That gives the Federal Reserve a power that extends far beyond American borders. When the Fed raises interest rates, it does not just affect American homeowners. It sends shockwaves through every economy on earth simultaneously. 1 institution, 12 regional banks, 7 board members appointed by the president, and more influence over your daily financial life than any government on earth. The European Central Bank. The European Central Bank was created in 1998 and faces a challenge that no other central bank on earth has ever dealt with. It sets one single monetary policy for 20 completely different economies simultaneously. Germany is an industrial export powerhouse with low unemployment and fiscal discipline. Greece is a tourism-dependent economy that nearly collapsed under debt in 2010. Portugal, Spain, Italy, France, and 16 other nations all use the same currency and all follow the same interest rate set by one institution in Frankfurt. The problem is obvious. What is good monetary policy for Germany is often catastrophic for Greece. A higher interest rate that keeps German inflation in check might crush an already struggling Spanish economy. A lower rate that helps Italy might overheat the German economy. The European Central Bank has to somehow manage all of these competing needs with a single lever. It is one of the most complex monetary policy challenges in the history of economics, and it has produced some of the most dramatic financial crises of the last 20 years. When the European debt crisis hit in 2010, the ECB essentially told struggling countries to accept painful austerity measures in exchange for bailouts. Unemployment in Greece hit 27%. An entire generation of young Europeans lost their economic footing because of decisions made by unelected officials in a building in Germany. The Bank of England. The Bank of England is the second oldest central bank still in operation in the world, founded in 1694. It has been controlling British monetary policy for over 330 years. It was originally created to lend money to the British government to fund a war against France. The government needed cash. A group of wealthy merchants provided it. In exchange, they got a banking license and the right to issue banknotes. That arrangement became the template for almost every central bank created after it. The Bank of England nationalized in 1946, meaning the British government technically owns it. But it operates independently from the government on monetary policy decisions. When inflation hit double digits in the United Kingdom in recent years, the Bank of England raised interest rates at the fastest pace in decades, sending mortgage payments skyrocketing for millions of British homeowners overnight. One building on Threadneedle Street in London, making decisions that determine whether millions of people can afford their homes. The Bank of Japan. The Bank of Japan has been running one of the most radical monetary policy experiments in human history for over 30 years, and the results should terrify every economist alive. Japan's economy stagnated in the early 1990s after a massive asset bubble collapsed. The Bank of Japan's response was to slash interest rates to zero, then to keep them there for decades. When zero interest rates did not revive the economy sufficiently, the Bank of Japan went further. It began buying government bonds, corporate bonds, and eventually Japanese stocks directly, pumping money into the economy through a process called quantitative easing. The Bank of Japan now owns assets worth more than the entire annual economic output of Japan. It has purchased so many Japanese government bonds that it essentially controls the entire bond market. It owns significant stakes in hundreds of Japanese companies through stock purchases. What happens when a central bank that owns this much of its own country's economy eventually tries to exit these positions is a question that keeps economists awake at night. Nobody has ever done this before at this scale, and nobody knows how it ends. The People's Bank of China. Every other central bank on this list operates with at least some degree of independence from its government. The People's Bank of China does not even pretend to. The People's Bank of China is directly controlled by the Communist Party of China. It is not an independent institution making neutral monetary policy decisions. It is an instrument of state power used to advance China's economic and geopolitical goals, and those goals are significant. China has been systematically building an alternative financial system designed to reduce the world's dependence on the US dollar. The digital yuan, China's central bank digital currency, is already being used domestically and is being pushed internationally as an alternative to dollar-denominated transactions. China has established currency swap agreements with dozens of countries, allowing them to trade directly in yuan without converting through dollars first. It has built its own international payment system as an alternative to the Western-dominated SWIFT system. The People's Bank of China is not just managing China's domestic economy, it is an active participant in what may be the defining geopolitical competition of the next 50 years, the battle over which currency dominates global trade, the Bank for International Settlements. Most people have never heard of this one. That is exactly how it prefers things. The Bank for International Settlements was founded in 1930 in Basel, Switzerland. Its original purpose was to manage German reparations payments after World War I. That mission ended, but the institution did not. Today, the BIS is known as the Central Bank of Central Banks. It is the institution where the heads of the world's most powerful central banks meet regularly to coordinate global monetary policy. The Federal Reserve, the European Central Bank, the Bank of England, the Bank of Japan, the People's Bank of China. They all have a seat at the BIS. The decisions made in those meetings about global financial stability, about coordinated responses to economic crises, about the future of the international monetary system, are made behind closed doors with no public record, no press access, and no democratic accountability of any kind. The BIS operates under a legal framework that gives it extraordinary protections. Its premises are inviolable. Its assets cannot be seized by any government. Its communications cannot be intercepted. It is essentially beyond the reach of any law of any country on earth. It processes trillions of dollars in transactions annually. It sets international banking standards that every bank in every country must follow. And it does all of this with almost no public awareness that it even exists. If there is one institution on this list that represents the hidden architecture of global financial power, this is it.